Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video I'm going to talk about one company that I sold and one I've added to the portfolio. I'm going to explain why I've sold that company. There are two reasons and why I've decided to add to this company. So we'll talk about both companies, we'll look at the financials, and I will give you exactly the reasons why. Now, I haven't done any videos for the last few days because I have been under the weather, have had basically my voice was all over the place, so I didn't actually do anything in terms of videos, but I have planned quite a lot of videos, including a portfolio update. And this is not going to be your typical portfolio update because a lot has changed. Okay, I know you can't see it, I'm not going to tell you yet. Inshallah, you might have to wait for maybe a day or two, but there are quite a few changes that I've made to the portfolio, and I will tell you exactly what that is. Inshallah, beginning of the next video I'll explain everything that I've made. Like I've always said to you guys, I started this whole YouTube thing to actually share my journey and to be authentic and try my best to educate as many people as I possibly can based on what I know. I know so little, but I'm going to share that with you guys. But the most important thing is for me to share my journey with you guys. And that includes basically everything that I'm doing, whether I'm selling, whether I'm buying, whether it is a family portfolio or this portfolio and so on. And you have access to everything that I am doing through here. Okay, so the Patreon account is where I share when I buy and sell, especially with the family portfolio side of things, and you get access to a lot of things, including Discord. I'll be honest with you, I have not had the opportunity to contribute to the Discord for quite a few days. I haven't, like I said, I haven't been well and work has been absolutely killing me, but there are amazing brothers, genuinely mean amazing brothers, who are sharing very good practices on daily basis, talking about things that matter in the market, whether it is the earnings report or news that's coming up or what they're buying, what they're selling, and all sort of things, asking each other questions, holding each other accountable. And that's what we need, because I'm not just here just for me, I'm here for the community, for the ummah, inshallah. And if we can help each other do that, that will be absolutely amazing. So if you are out there, you're looking for Sharia compliant investing side of things, join that basically community of people who are genuinely sharing very good practices on daily basis, holding each other accountable, and hopefully will help each other in the long run to make money in this situation. Is that so we can actually provide for our families and inshallah take care of ourselves in our retirement and other things that we need to take care of, just build even general, generational wealth for your family. Now let's talk about the two companies. I've sold one, I bought one. I'm going to talk about the one I sold first, and that company is Intuit. I've mentioned this before, but I haven't done it. I kind of wanted to hold on to this one for a little bit longer, but I decided to sell it from this portfolio. So there's two reasons why I sold it. First one is the fact that I do own it in the family portfolio, and that one has actually, I bought that one earlier, and that one has slightly performed better than the one I had, the shares that I had in this portfolio. So I still own the other one. I'm not selling it yet. Okay, I might decide to make basically part with this company, and then I'll let you know inshallah in the basically Discord, and I will let you know on the Patreon account side of things where I share the family portfolio. But that's the first one. So I still own it in the family portfolio. So it's not just basically I'm not completely getting rid of it. And the second reason is it hasn't really done anything. For 1 year, it's down 10%. If you compare this company with the other companies in a similar sector or the software side of things, you're looking at least a minimum 15, 20, 25%. Just like doing what the S&P 500 is doing. And when you look at the earnings expectations, okay, this company confuses me a little bit, because you've got year-over-year growth of about 14%, almost 14% again, right? Expected, and then you got revenue about 12%. So it looks really good. You think, okay, everything should be heading towards the right direction, right? But it just doesn't. It makes no sense to me. Like from $4.1 billion to $16.5 billion of total revenue. And they're only spending about $3 billion of that. They're taking home gross profit of $13 billion. Okay. And then after basically after all of these paying for general administrations and all of these things, the net income, we're looking at about almost $3 billion. They do have excellent free cash flow. They have a growing EPS from $1.30 to $10 something. But the stock hasn't done anything, just literally have done anything. And I'm tired of it just waiting for this company to do something, because there are other opportunities out there. So I had £100 basic gains for this company for over something 2 years, whereas similar sort of a companies have done absolutely amazing. So what I've decided to do is sell it from this portfolio and still hold it in the family portfolio for now. Okay, so that's the first thing I've done. So that £100 that I gained, by the way, and this is something inshallah I'm going to address you into Discord, is the fact that when you basically try to purify your stocks as much as you can, because whenever I make a sell, I basically promised myself 10% of that, 5 to 10%, depending on how much non-Sharia compliant revenue this company has, I will donate it. So for this one, I'm going to donate 10% of that basically. So £10 inshallah to whatever. Even if this was a couple of times, I don't know, £10,000, I will still donate that 10% because I made that commitment to companies like this, okay, who potentially might have non-Sharia compliant, just to be on the safe side. Okay, that's for me paying sadaqah. It's not like it's not, there's no rule that for me to say that I have to do this, but basically in terms of price appreciation, in terms of dividends, we all know the rules. Okay, there's a video on the basically on my channel that talks about this, but I'm just saying I just also have my own rules where if I sell this, I'll just give it 10% off basically the gains. If it's a loss, what can I do? It's a loss, so I'm just going to take the loss and just walk away from the situation. So inshallah 10%, the moral of the story is 10% of my basically gains will go towards inshallah charity. Okay, that's just a decision that I've made, and I will be talking about more about that inshallah in the next video where we talked about family portfolio, because like I said, there's some huge changes that I made to the portfolio that I will be sharing, and that's something, one of the things that we're going to talk about is that. Okay, the company that I bought is called CubeSmart. You might be thinking, what is this guy doing? He's selling into it, which is a high growth company, buying basically a REIT. Real estate investment trusts are companies that exist. They do buy other properties or own other properties. They rent it out, or storage places, especially this one is a storage place, and they have to give up to 90% of their basically revenue, like income, or net income, to actually as or free cash flow, whatever you want to call it, as a dividends. Okay, that's the rule for them. And then what they do is they sell basically more shares, so they kind of dilute your shares to actually acquire other businesses or even buy land or build whatever, and then of course then they make revenue, and then it comes to you in the form of dividends. Now I really like basically CubeSmart because first of all, it's a very small company, about $10 billion. It has excellent dividend yield of almost 5%. That dividend is safe, credit rating of BBB. Okay, now when we look at the beta is very also low. This is one of the things I like about this company. Now, if we look at the payout ratio, normally, like I said, is basically the payout ratio expected about 90%. So this one is 77%. 14 years of increasing that dividend without a cut. Okay, latest increase was 2%, and the 10 years is about 20%, which is very, very good. And then for the last 5 years, 10 years is about 16%, which is very fast, which is really good. This is what we want to see. Okay, that growth is absolutely amazing. Now, you get $2.08 for every share of this company that you own. Like I said, it's let's just quickly show you the description. Okay, is a real estate investment trust focusing on self-storage properties across the United States. It generates revenue by owning, developing, managing, and acquiring storage facilities that people and businesses rent to safely keep their belongings and access goods. It's really simple. Okay, nothing too fancy. They own these places, people go there, put their stuff, lock the place, and walk away. So companies use it, individuals use it, simple business. Okay, and this is one of the reasons when I first started, I used to look at companies whose business I can easily understand without having to overcomplicate. And this is probably one of those ones that's really simple to understand. So they pay quarterly dividends or basically and yearly dividends or annually $2.08, and the ex-dividends are March 30 and 31st of March this year. Okay, now it seems based on the dividend yield theory of valuation side of things, it looks like it's basically undervalued at the moment. So because that's the current price, they expect the price to be 43 to 53, so that range, and it basically seems undervalued at the moment when you look at it. Okay, now when you look at the dividend yield theory side of things, okay, you can see here basically what happens is the 5-year average if the 5-year average is higher, okay, then the current yield then is overvalued. If it's lower than the current basically yield, then it means it's undervalued. So this one, the 5-year average is lower than the current yield, which is 4.91. 4.21 is the 5-year average. So for that reason, it seems basically undervalued. And according to the 5-year average of 18.7, when it comes to the price to adjusted fund from operations ratio side of things, we're looking at 18.7. Right now it's about 16.6, so it's lower than where it has been over the last 5 years. So it is basically seems quite cheap, and it's more or less the same as with the rest of the sector, if you like. And then there's a few more. So adjusted FFO payout ratio is about 81%. So this year is about 77%, we've already seen. Next year is going to increase it to 81%, which is absolutely fine with me. I don't really mind that. Free cash flow payout ratio is looking about 76% for next year. Adjusted FFO per share, it has been increasing over the last few years. They might expect a little bit decline in 2025. Free cash flow per share, as you can see, is also increasing, or a slight decline basically next year. And then we have the basically shares outstanding. Now, like I said earlier, REITs depend on issuing equity to fund a property acquisition, since they are basically, they retain little internally generated cash flow because they give out this as a form of dividend. So for that reason, they actually dilute your shares, which is fine. Okay, so they basically dilute the shares to buy other companies, which means they create more basically income, and they own more properties, which increases in basically the total sales and whatever overall. And total sales moved from 0.357 billion to right now over $1 billion over the last 10 years, which is absolutely beautiful to see. Return on equity 14%, return on invested capital we're looking at about 8%, and then operating margins of 46%. Free cash flow margin, which we're not really interested in because it's REIT, 57%. Okay, and net debt to EBITDA right now we're just below 5.5 is what we're looking for, and right now it's about 4. So just to kind of summarize things, that's the company that I sold. And as you can see here, my current portfolio yield is 2.09. My target for this year, and I will talk about it next time we talk about the entire portfolio, I'm looking maybe 2.5 to 3%, inshallah. As you can see, my dividend income is expected to be 2,565 pounds and so on. I will be sharing a lot of this information with you guys, but what I'm going to do is I'm going to show you now the company that I've added. And this, as you can see, I've got 68 shares, so about 69 shares right now. Average cost of $34 pounds and 23 pence, and that's basically average cost for the US dollars basically is $42.51. And as you can see, that added about 96 pounds and 88 pence of income moving forward, inshallah, because of that 4% whatever. Remember, I have to also take into consideration the fact that I pay 15% when it comes to US stocks or whatever. So that is what I wanted to share with you guys today. There is a lot more, like I said, there's a lot more change in the portfolio. That's why it's not moving up and down, because I'm gonna reveal it next to inshallah in the next video. But I hope you're enjoying this type of content, and if you are, like I've always said to you guys, it will mean the world to me if you can join us in the Patreon account, where you get access to a lot of things that inshallah will help us have the subscription that we use for this type of software that we need to pay for, and inshallah, and so on. So if you can join us there, it will be absolutely amazing. Have a wonderful day. Assalamu Alaikum.